Okay, now that is what we are going to look at. These overheads, the under or over, this is what I have. I've budgeted overheads of 45,000. It is more than whatever is actually absorbed, which is 40,000. So there is under absorption. It means the real overhead, the real expense is 45. The real expense is 45 under budget, but I've actually spent this. After doing everything, when I now go to my analysis of the expenses, when I get the summation of everything, I'm getting that I only absorbed or used this as the fixed overhead expense. So it means there is under absorption. Under absorption, it means I've understated. I have understated my expenses. When you understate expense, what next are you interfering with? When I understate expenses, what next am I interfering with? What next am I interfering with? When I understate expenses, what else am I interfering with? Somebody to tell us something there. What else am I interfering with? If I understate expense, I'm exaggerating my profit. Is it? My profit will be more than what it should be. I'm understating my, actually, I'm doing what? I'm understating my profit. I am understating my profit. To take my profit to the right place, what will I do? The understated portion, I will go to income statement. I go to my income statement. I have here sales. Of course, this section here, I have sales. I indicate the amount. Then cost of sales. Then I get my gross profit and come to the section of expenses. Still introduction part, but you're going to see how it's going to be applied. In the part of expenses here, that's where I will list my expenses and then get my net profit. This net profit that I'm having down here, it is overstated because here this expense, the under absorbed, so that is under absorption of overheads. If I bring it here, it will be an expense and therefore it will reduce this profit. It will take it to the right place. It will take it to the right value, to the right figure. So understated or underabsorbed, the underabsorption will be placed here as an expense so that it reduces this profit. It take it to the right place. That is option one. Option two, I will come here to the cost of sales because cost of sales is always subtracted for me to get my gross profit. I want us to see sense out of this. My cost of sales is 80,000. My cost of sales is 80,000. And then my sales is 120,000. Let me use 150. Make you understand something here. 150, that is our sales. So my gross profit will automatically be 70,000. My gross profit will be 70,000. And then when I come to under absorption of overhead, which was 5,000. So without this, it is not mentioned anywhere. I'm going to have maybe selling and distribution costs. Selling and distribution cost of 30,000. I don't want to use a figure that will take me to 40. Let me use 20,000. Yes, I have 20,000 here as an expense. So when I come down here, my net profit automatically becomes, of course, that's an expense, so we need to do that. Here, I'm going to have 50 as net profit. 50,000 as net profit. So remember, the overhead, the fixed overhead has been understated. And that's why I am having 40 as actual overhead expense and the budgeted is 45. So the difference, the understated amount is 5,000. It means it is exaggerating my profit. To take my profit back to the right place, I must use that 5,000 as an expense here. So that to take my profit to the right place, which is 45,000. That's number one. Or that is option one. Option two, I will not put it here. No. What will I do? Because cost of sales reduces my gross profit, I will come and add it here. Add it to cost of sales. Add under absorption. So if I add under absorption and the real cost of sales is 8,000, it will now be 85,000. It will now be 85,000. My cost of sales. Now 150 minus 85,000. What will be the figure here? 150 minus 85,000. What will be the figure there? What will be the figure there? 150 minus 85,000. I'm having 65,000. I want us to watch down here. The real net profit we've identified that is 45,000. If we rectify the understated fixed costs here, the understated fixed cost there. Just a minute. At this point, we now have gross profit as 65,000. And remember, this under absorption, I've eliminated it. It's not going to be part of the expenses here. I've taken it to be part of the cost of sales. Now 65 minus 20,000, I will get 45,000. I will get 45,000. What are we dealing with? We are dealing with under absorption of overheads. Under absorption of overheads. That is what I am dealing with. So the under absorption of overheads, we've been able to see how it arises and how to treat it. And from this point or whatever I've demonstrated here, we've now seen that the under absorption of overheads can be taken care of in two places. One, I put it as an expense under expenses. I make it as an expense under expenses down here, then it reduces my net profit. Or I put it or add it to cost of sales. When I add it to cost of sales, my gross profit will reduce and then it rectifies my net profit down here. So we have two options or two ways of dealing with under absorption of overheads. My question is this: how are you going to treat this as an individual? Which one are you seeing you are comfortable with? Are you going to use it here in the cost of sales or just take it to the expenses section? Where are you going to apply it? Because we have to know from point or from day one. So anytime you're going to do a revision, I will know very well, okay, so and so has decided to put it as part of cost of sales. Another person has decided to put it as expense here or deduct it. To cost of sales, we add it. To expenses, we deduct it. So which one are you going to use? Jackson is telling me that it's comfortable when you bring it to the expenses section and deduct it. Then we have Celestine is also confirming that if I put it at the expenses section here and deduct it, I'll be okay. I will not get confused in the process. Okay, then that is Solomon is saying, how about deduction from net profit? If the income statement was calculated already, they will not calculate it for you. But if it was already calculated up to this point, you just know where to put it. They will not calculate for you. If they bring for you a question under this, they will not calculate this one. This one here, you will calculate it by yourself so that you know how to rectify the mistake. They will not give you. But I think getting it is given, just deduct it or put it at the right place and you get your marks. So as we now move forward, every one of us have now seen the specific place or how they're going to treat the under absorption of overheads. Now, if I now go to the over absorption of overheads, let's see what this person is going to do. The over absorption of overheads. So I have budgeted, then I have utilized for actual overheads. So budgeted here, I have 22,000. Then I'm getting to this point that actual overhead is going to be 30. All these other things remains constant. My cost of sales is going to be 80. My cost of sales is 80,000. To give me gross profit of 70. And then selling and distribution cost is 30,000, which will take me to a net profit of 50,000. That is what I have in the question. Now, budgeted overhead is 22,000. The actual overhead that has been absorbed into the expenses section is 30,000. Now, do we have under or over? They budgeted for this, they have actually utilized this. So it is over absorption of overheads. Of how much? Over absorbed. Over absorbed overhead is going to be 8,000. That is what we have. The over absorbed overhead is 8,000. How am I going to deal with this? Over absorption means I've exaggerated my expenses. I've exaggerated my expenses. Exaggerating expenses means I've reduced my profit by overstating the expenses. So how do I rectify this? This profit has been reduced by overstating my expenses. It should be more than this. So for me to make it be more than this, what am I going to do? What am I going to do? What am I going to do? Yes, somebody, add back to net profit. So what am I going to do? I'm going to add it back to my net profit. Maybe under gross profit here, I will indicate other income, or I just indicate here after gross profit, I indicate over stated or over absorbed. Over overstated overheads, and bring it there as an income. Then I make it to be 8,000. So total income will be 78,000. I subtract 20 to get 58. That is option 1. I bring it here and say overstated overheads or over-absorbed overheads to be an income under gross profit. Then I now list the expenses. It take my profit to 58. Now, another person says, no, I don't need to put it there. I want to take it to cost of sales section. I want to take it to cost of sales section. So we've gotten that now the right profit should be 58,000. But with this, it's telling us that it is 50,000. Now, if I'm going to take it to the cost of sales section, what will I do so that I get the right profit of 58,000? Am I going to add it to cost of sales or subtract it? Am I going to add it to cost of sales or subtract it? Am I going to add it to cost of sales or subtract it? Somebody to help me at that point. I'm going to less it from cost of sales. So what am I going to do? I come to cost of sales and say less over absorption of 8,000. From 80,000, I'm going to remain with 72,000. 150 minus 72. What will we have here? 150 minus 72. 150 minus 72. Somebody, what will we have? It will not be 70. It will be something else. 150 minus 72. 150 minus 72. We are going to have 78. 78,000 as now gross profit less selling and distribution cost of 20,000 will take us to what we call 58,000, which is the right profit, So that's how we deal with it. That's how we deal with it at this point. That is the over or under absorption. Now, in a question, the examiner might give you this, and then you calculate this absorbed overhead by yourself using the knowledge in topic number 5, or using what we covered in topic number 4. The reapportionment of overheads. Once you reapportion everything, you are getting units there, you divide by units and get cost per unit. Or even get the summation of everything, the allocation of overheads, the distribution of overheads. And then you are given now the budgeted. After calculating this, you compare, is it over or under absorption? But this one here will appear clearly in topic number 7, when you're going to look at the two costing methods. That is marginal and absorption costing. So that's all about the over and under absorption of overheads. So if you want to get that concept, there's a question that was tested August 2022. August 2022, there's a question there that is for MA, not ATB paper. MA, August 2022. I can't remember the question, but you are being asked to do what? First of all, do the reapportionment of the overheads using one stepwise method, then simultaneous methods. These two we covered last week, how to do it using stepwise. Stepwise is the repeated. Simultaneous is the algebraic. Method. So once you do all that, you'll be able to remain with the production departments. Now look at the units and get the overheads, the overhead absorption rate. It is the total overhead. Overhead absorption rate, total overheads. Overheads divided by total activity level. The overheads were allocated for departments A and B. You have the units there, or the amount. Now you have the amount, and then you divide by the units, the actual activity level. It can be units, it can be machine hours, depending on what you are dealing with. Now, after doing that, you now know very well, if it depends on the number of units, you are being told, in the current month, they were able to produce 40,000 units. These 40,000 units are going to be multiplied by the overhead absorption rate, which we calculated here to get total overheads absorbed. But the budgeted, remember, was already given up here. You see the budgeted somewhere here, if you add it up there, and then you compare with the actual. Is it over or under absorption? Then you do the treatment that we've just discussed here. Okay, it is August 2022. Question number 2B. Yes, question number 2B. So my good people, you should be able to find time to do that question, and then we discuss it here. Find time, do that question, then we discuss it, here. Now, activity-based costing. Actually, we introduced this topic number 5 last week. We introduced this topic number 5 last week when we were doing something about the reapportionment of activity-based costing. Activity-based costing. Now, this is what I want us to look at. The activity-based costing. Topic number 5. Activity-based costing. This is what you need to know, which we discussed last week. This is what we discussed, which you need to understand. If you look at this one here, remember what you are given? You are given the cost, the overheads. You are given the overheads here. We are given the overheads. Remember the question that we are doing there? We are given the overheads. And then down here, we are given now the cost pool or the cost driver. So here, the overheads here, this is where you have up there, the cost pool. We have rent and rates. I think you can remember the question. We have repair and maintenance. Maintenance of machine. We have depreciation of machine. We have insurance of inventory. So this one here is what we call the cost. That's what we call the cost pool, as you are able to see on my screen. That's what we call the cost pool. And then this cost pool now are what are attached to the cost or the expenses that we incurred, the overheads. I have rent and rates of 5,000. I have 1,200. I have 15,000. I have 8,000. Then I now move down and look at the cost drivers. Under the cost drivers, I will be given. Remember, we have department A, B, C. So department A, B, and C are there. Then I have even canteen expenses. Let me add it here. Now, the first thing that's appearing here is area in square meters. I have the area here, 4,200, 400, so 400, 400. I have number of employees. Here I have 12, I have 7, I have 3. Then the next thing I have net book value of plants. Then I have value of the value of cost of inventory. So net book value of plants, I have 4,000. I have 15,000 in department B. Then I have 20,000 in department C. Cost of inventory, I have 500. I have 1,500. I have 750. That's what I have. So these ones here are the cost drivers. They will give me the basis of allocating the overheads that I have here to each department. So I now come to department A, B, C, and I start with this part. Ask myself, how will I share the rent and rates? How will I share the rent and rates? Which one will be the best cost driver for allocating rent and rates? Those who were in my class last week, those who have been able even to see this question here, these notes here, can now relate. Those who are in this meeting can now relate and tell me the best cost driver that you are going to apply. What will be our cost driver here? I want to distribute rent and rates to department A, B, and C. They are now the production department. The production departments, taking it from service to production, that is a knowledge of topic or a concept of topic number 4. Topic number 5 now, I want to know the basis. What will I use? I'm being told that if I pick area, it will be the best allocation, it will be the best cost driver. So I'll come and look at this. The total area is 1,000. You can even add it here. Or in some questions, the examiner would like you to just pass and proceed to the next level. They even give the total. We have 1,000. We have 10, that is 22. Here we have 40, 20, 60, 75,000. Here they give you 5 plus this 2,000, 2,750. That's what they give you. Now, in this topic number 5, the other time we were now avoiding the concept of overhead absorption rate. In topic number 5, for you to know this thing very well, come and calculate the overhead absorption rate. What is the formula for overhead absorption rate? Area using ratio 2:1:2. No. That one we covered in topic number. That one we applied in topic number 4. That one we applied in topic number 4. Now here we are not going to do that. We are going to look for the overhead absorption rate, which is going to be the total overhead over activity, total activity level. This total activity level, remember some people or some books are indicating total number of units. Now, if you're dealing with area, we are not dealing with product, so there is no unit. We are going to pick the total activity level, which is the total area. So our budgeted or total overhead for rent and rates is the total amount of 5,000 that we want to distribute to a total area of 1,000 to give us 5. So we're going to have shillings 5 per square meter. We're going to have 5 shillings per square meter. Department A has got 400. So Department A will be having 400 times the rate. Our 400 times the rate of 5 will give us a value. And what is this value? What is this value? It's going to be 20,000. Is it 20 or 2,000? It's going to be 2,000. We're going to have 5 times 200, which will give us 1,000. And then we are going to have 400 for C, we give us the same value of 2,000. If I add these two things, they're giving me the total overhead that I was supposed to allocate. When I come to canteen expenses, of course, we are going to see canteen expenses. Here now they don't tell you, but now you have to know the best cost driver here. So which one I'm going to use to allocate the canteen expenses? Is it the area, number of employees, net book value of plant, or cost of inventory? Which one will be the best allocation basis for canteen expenses? Yes, which one will be the best allocation basis for canteen expenses? It is number of employees. But what if I add something here called contribution to pension scheme, then I first of all go to my question here and look at something called wages. If I have wages here, that will be the best allocation basis of contribution to pension expenses given in the question. So the canteen expenses here, we have 20,000. Very simple. I come to my question or the cost driver here, look for the number of employees. 12 plus 7 plus 3 plus 2 will give me 22. 12 plus 7 plus 3 is 22. Or let me make this one here. to be 25. The total to be 25 by adding 3. So this one will be 6. We make it 6 for just some reason. Now we have 25 as the total here. 25 as the total. When I want to get the overhead absorption rate for canteen expenses, overhead absorption rate, the formula remains unchanged. Total overhead, which is 20,000, I divide by total activity level, which now happens to be the number of employees. What will be our overhead absorption rate? What will be our overhead absorption rate? It's going to be shillings 800 per employee. 800 per employee. 800 per employee. And then now I come to this part. Overhead absorption rate is 800 per employee. What is Department A having in terms of number of employees? I have 12. So we'll take 12 by 8. Then a good student should be able to post for me the answer there. 12 is the number of employees multiplied by the rate. My good student is telling me that is 9,600 for Department A. Then Department B, I come here and get that there are 7 employees. So I take 7 multiplied by the rate. 7 by the rate, 7 by the rate, that is by 800, should give me 5,600. Then I go to C. I have 6 employees. 4,800. If I add all that, I will be able to get the total which I'm distributing, these 20,000. That is what I need to do. Now, in our question, let's think we add only those 2 canteen expenses. We only add those 2. We only add canteen expenses and rent and rates. So for the insurance of inventory, we are going to look at the value of inventory. Just try and locate the value or cost of inventory. Net book value will be anything related to plant. Is it insurance of plant? Is it depreciation of plant? Then I'm going to look for the net book value of the plant. If I'm going to deal with the amount incurred by making number of requisition, or if I'm going to look at the material movement cost, how many times am I going to make requisitions to request for materials? If I'm going to sell, how many times have I received orders? So the number of orders will determine material or stock movement expenses. Now, this is what we have. Let's get the total. Total overheads allocated. Total overheads. Tutakuwa na ngapi? Let's get it. So this one here will be 11,600. I have 6,600. I have 6,800. That's what I have. Then somebody tells you to give them the cost per unit. So I have now units produced in each department. I have 400. I have 150. I have 250. So let us now get the cost. Cost per unit of output. My good student should give me this 11,600 divided by 4. 11,600 divided by 4. 11,600 divided by 4. As we try to look for maybe a past paper question. 11,600 divided by 4. My good students are not giving me that. 11,600 divided by 4. I think it's a whole number, but you've not rounded off. I believe you've not rounded off. Yes, that's what Ned is giving me. Somebody should confirm before I move to B. Somebody to support or disagree with Nelly's answer. Somebody to support. Okay, I can see they're supporting that. Let's move to B. 6,600 divided by 150. 6,600 divided by 150. 6,600 divided by 150. We have 44. And then C, Department C. What will we have? Department C. Department C, what will we have? 27.2. We are going to have 27.2. We are going to have 27.2. Now, in a question, sorry, the examiner does this. We've already used these ones to get our cost per unit of output. So you are being told that once you calculate this, of course, in the additional information there, you'll be given the selling price per unit for you to get gross profit. Or what they normally do is this. What the examiners normally do is this. They know very well that getting to this point might be a challenge to some people. So they tell you that after getting cost per unit, they have, or they want to now introduce a margin. So get the selling price. They want to introduce, let's call it markup. For department A, they are introducing markup of 30%. Here, they are introducing markup of 25%. And then here is 40%. Now get out the selling price. Selling price. How will we get the selling price? Remember, margin is equal to profit is equal to gross profit over sales. Markup is equal to gross profit over cost of sales. Now, how do we get the amount we are going to sell these goods? How will we get that? How will we get that? How will we get that? Let's say this one is margin. Let me not complicate things. Margin is now gross profit over sales. Then markup is cost of sales, or gross profit over cost of sales. So what will be the selling price? What will be the selling price? What will be the selling price? They want to get selling price, but this is the cost of producing one unit. Remember what you normally have here? You have sales. You do not know that. And then you get cost of sales. So of course, we have one unit per unit here. So we have the first one, we have 29. Let's use the first one. This is the cost of sales. For them to arrive at gross profit, they need cost of sales. So let's get to cost of sales. We have margin and also markup. So for us to get, if this is the margin hapa ni, let's have 30% is equal to gross profit over sales. So we have two unknown. Atujui sales, atujui gross profit. Okay, now for me not to take you to a far, what about if we say this one is markup? Will we have two items there? We have gross profit, which we do not know, and then we have cost of sales, which is already 29. So what will I do? Or what am I going to have that? If I divide it by 29, I'm going to get 30%. So my X is equivalent to 30% multiplied by 29. Multiplied by 29 for me to be able to get gross profit. So if I have this as markup, let me take you back to the far. So if I have markup, I should be able to get to gross profit. And then I finally get to selling price. I can now get to selling price. So gross profit here, if this is markup, Tumia formula. Markup is equal to gross profit over cost of sales. Our gross profit is X. How do we get X? It is now 30% multiplied by this. So we are going to have here the first one. I'm going to have 30% by 29 to give me gross profit. 8.7, that is what I'm being told. There are about this 25% by 44. 25% by 44. 25% by 44. 25%, that is 11. How about 27.2 by 40? 27.2 by 40. This one here. 27.2 by 40. 10.88. 10.88. Sales minus cost of sales will give us gross profit. Now, my good students, we have gross profit as 8.7. You are having something here minus cost of sales. We are getting 8.7. So what will be our 8.7? What will be our sales value? The sales value, the selling price. Selling price upper. Add back this plus cost of sales will give us, this one will give us 37.7. Then this other one will give us 55. And this one here will give us 39. Is it 38.08? Is it 38.08? 38.08. Great. So that's what we have as the selling price. The examiners may decide to check into this direction, or they give you, in the information given, they give you that. They don't want you to go this direction. They do away with all this information here. And then what do? They give you selling price. Selling price of this part here, we have 50, we have, we have 70, we have 85. So we have sales. We have sales for A, B, C. Sales or selling price, because we are getting it per unit. They will always give you maybe per unit first. So what do we have? Selling price per unit is 50. But if you want to get sales, already units are given up here. So what will be our sales? 400 by 50. 150 by 70. 250 by 85. We get the sales there. Then cost of sales, we subtract cost of sales for us to get gross profit. For us to get gross profit. For us to get gross profit. Then they tell you that for the entire organization, these are departments. For the entire organization, they add what we call fixed costs. They add fixed costs that is having a total of, let's have, let me see the value that I'm being given here. Or I want to know how I'm going to do it to you. So let's get the value first. Sales will be units multiplied by selling price. 50 by 400. 50 by 400 will give us, is it 20,000? Is it 20,000? Great. 150 by 70. 150 by 70. 150 by 70. Somebody? Utakuwa na ngapi? 10,500. And then 250 by 85. 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 21 or 50. Now, After getting that, our cost of sales tutapata ngapi? Cost of sales. This by units, this by units, this by units. Now, a good student who knows that how this thing works, you covered something about gross profit per unit, gross profit. So what they do is this. They take sales, that is 50, minus cost per unit 29, then they multiply by units for them to get gross profit directly without going through this process because time is limited. But because we are introducing this, I want my good student as well to get me cost of sales. Cost of sales for A. Cost of sales for A, 29 by 400. 29 by 400. What are the answer? 11,600. 11,600. Good. Then for B, 44 by 150. 44 by 150. 44 by 150, my good people here. 6,600. We move to C, that is 27.2 by 250. 27.2 by 250. Tutakuwa na ngapi? I'm being told it is 6,800. I'm being told it is 6,800. Okay. Tupate gross profit. Tupate gross profits. Let us get gross profit. So for A, department A, tunapata gross profit ya ngapi? Department A, tunapata gross profit ya ngapi? Somebody, 8,400. Department B. Department B. Department B tunapata ngapi? 10,500 minus 6,600. That is 3,900. Then C, 21,250 minus 6,800. 14,450. 14,450. Then you are being told that the fixed costs for the entire organization is 16,000. The fixed cost for the entire organization is 16,000. So we now come to expenses. Let's say we have fixed costs. So what are we having? We are having 16,000 for the entire organization. How are we going to share that to these departments? Then they tell you additional information number 5. Because all that we've done here will be explained in the additional information. Maybe we've now reached additional information number 5. We are being told the fixed overhead cost or the fixed cost of the company was given as 16,000, which is supposed to be distributed amongst the departments. In what proportion? In the proportion of the units of output. We are going to distribute the fixed cost in the proportion of units of output. So the first thing that you need to look for, this one here. Remember your formula, overhead absorption rate will guide you. Total activity level or total cost, you now pick the fixed. And then you divide by the number of units of output, the activity level will be 800. So if you want to get the rate here, then you're going to have 20. We are going to have 20. So it's going to be shillings 20 per unit. Department A produced 400 units. By 20 will give us 400 by 20 will give us 8,000. That will be there. Department B, we have 150 by 20. I think it will be 3,000. Department C, 250 by 20. I think it will be 5,000. Then from there, we now get net profits. We now get net profits. So here, 400, here, 900, here, the difference between 14 and 5, I think, is 9. 9 for 50. Is Is it 9 for 50, the last one? Is it 9 for 50? Great. Now, I want us to look at something still. Will it make sense? Let us see. We can see Department A is producing 400 units. The company is struggling here to produce 400 units in Department A, only to get a net profit of 400. Then Department B is only able to produce almost less than half of what is being produced in Department A, and is able to generate a profit of 900. From this point, remember the title of our unit, Management Accounting. Main interest here is to minimize on cost. Now the company or the management will sit down and say, now from our analysis, what is it that we are buying in Department A that does not add value? It only increases the cost of production, but does not help us to get the value we need. What is that we are doing in Department B? Whereby by only producing 150 units, we are able to make more profits than what we have in Department A. That's now when they will decide, should we stop this department? Should we minimize on the cost? Should we support Department B because it can support the entire organization based on what we've seen here? What are we going to do? What should we do as a management of the company? So that is now the final interest of the management in coming up with all this analysis. What can we do so that next time we do it better than this? And now that's where they apply this information. And if you want to know now this one here, just go to advantages of activity-based costing. Go to advantages of activity-based costing, and you'll be able to see what management normally looks for when they prepare such kind of information. You'll be able to see what they are looking for when they prepare information of this kind. To that effect, let us move to December 2022. Let us go to December 2022 and see what was tested there. December 2022. December 2022, and see what the examiner wants us to do in that particular question. December 2022, do I have it here? Let us all migrate to that point. December 2022, management accounting, December 2022. And then we see, are we able to get something? Are we able to apply what we've learned? Those who are joining us for the very first time, those who have not joined our paid group, remember the cost of doing this course is only 4,200. Contact us via this number. Contact us via these two numbers. The cost is 4,200. Once you pay this, we'll also add you to our new system, that is LMS, to access the past videos for previous classes and also notes, as you just see at the introduction part of this topic. So let's go to December. Let's move to December 2022. December 2022, question number 3A. December 2022, question number 3A. Are we there? Are we able to see the question? Are we able to see the question? Required. Using activity-based costing, determine the cost and gross profit per unit for each product during the period. That's all. There's nothing they're going to hide from you. They just give you the way we are learning it here. Now, if you look at the question, we have the product, L, and G. So we have T, Q, and M. We have units produced and sold. We have selling price per unit. We have now been given selling price. direct material cost per unit, direct labor cost per unit. Now, something that I must tell you, if you are dealing with topic number 4, you are only concentrating on the allocation of overheads. When we come to topic number 5, we have overheads being allocated, but then there's that portion. We said we have direct material, direct labor, and then overheads. This direct material will be given maybe cost per unit, direct labor, cost per unit, then the overheads, they now extend it and bring it in this manner. So if you look at the first table there, we have units produced, Q, T, and M, selling price per unit, direct material cost, and direct labor cost per unit. So it means this one here is given. There's high chances that the examiner will be asking you about cost per unit, or even net profit or gross profit per unit, because we already have the prime cost here, then the overheads, and you have the selling price somewhere here. So there's high chances you'll be asked about the gross profit or net profit if they give you the fixed cost that is not supposed to be distributed. So let's read the question and see. When you now move down to the next part, we have production overhead cost, total, and cost drivers. They are even now mentioning to you, they are making it to be very simple. They are telling you not to now start thinking, how will I locate or how will I allocate the canteen expenses? Do I have number of employees? No, they have done that for you. We are being told that machine cost, they are going to distribute it based on machine hours, production scheduling, number of production runs, setup costs, number of production runs, quality control, number of production runs, receiving materials, number of components, receipts, and then packing material, number of customer orders. Information on the cost driver is given as follows. The distribution basis now. We have machining cost. We have machining costs. The total given there is 102,000. I want you to complete this so that when we meet tomorrow, we just revise this. But let me demonstrate the first one. So machining cost, we have 102 as the total. Allocation basis is machine hours. We are allocating it to T, Q, and M. Let's move down to the information on cost driver. Let's look for machine hours because that's the allocation basis. So machine hours per unit, we have for T, for Q, we have 1. Then for M, we have 1.5 hours per unit. Is it? That is the total machine per unit. But are we able to get the units for each product? Are we able to get the units for each product? Whatever we were using down there was the total. So let's get total, because for us to get overhead absorption rate, we are normally being told it is total overheads divided by total activity level. This examiner is very wise. They know these people have crammed all this. Just twist a little bit and then see what they are going to do. Here, this one here is now going to save somebody. Total overhead over total activity level. Under cost drivers given there, we have machine hour per unit of output. Not total units, per unit of output. Let's go to the first product, T. How many units of T were they able to produce and sell? 16,000. Machine hours required to produce 1 unit of product T. We are told there is half hours, 0.5. So what is the total hours that was taken to produce product T? Total hours taken to produce product T. Somebody, what will we have? That is 16 by 5. 16 by 0.5. 16 by 0.5. Sorry, 12 units. Thank you. It is 12 units by 0.5, which will give us 12 units by 0.5. What will we have? 12 by 0.5. Is it 6? It's going to be 6,000 hours. What about product Q? We have 16,000 now, times time taken to produce 1 unit. We are given 1 hour. That's going to be 16,000 hours. Then to produce product M, we have 1.5 of how many units? 8,000 times 1.5. What are we getting? What are we getting for product M? 8 times 0.5, I mean times 1.5. 8 times 1.5. 8 times 1.5. I'm being told it is 12. So add everything. 12 plus 16, that is 38. 38 plus 6. 38 plus 6. 38 plus 6. Itakuwa ngapi? $34,000. This 34,000 is what we have here as the denominator. Total activity level. Total overhead we already have here as 102. Total activity level is now 34. What will be our overhead absorption rate under machining costs? Overhead absorption rate will now be, shillings 3 per machine hour. So when I'm going to now allocate the machining cost to T, Q, and M, I'm going to use, so T will have the overhead absorption rate, which is 3 per hour, multiplied by the hours that was taken by product T. That is 6. Give me 18,000. Product Q, I'm going to have 3 by 16,000 to give me 48. Then M, I'm going to have 3 multiplied by 12,000 to give me 36. Can someone add these things if it will not be the same as what we have up there? Somebody to add. Pardon. Overhead absorption rate. Overhead absorption rate is the total overhead divided by total activity level. In the question, the examiner did not give us total activity level. So what happens? If we're not given that, the examiner gave us just hours taken to produce 1 unit. But if you look at what was produced, product T, they produced 12,000 and sold 12. Produced 16 and sold 16. Produced 8 and sold 8. But each is 0.5 hours. What is the total hours? Because that is what we need to have down here. I think it's now clear, Nelly. Then, if you now add this one, you get 34. This is it. This is the total activity level. Overhead absorption rate. Total overhead divided by activity level. We are getting 3 shillings per machine hour. Total for each product now. This now the overhead that they are sharing, which is 102. The 102 we are getting here is what we get here. We are distributing. That is machining costs. If you are through with machining costs, you go away with on this. You go away with on that. So the machining cost, that is what was there. Look for one item as we close this class. Let me see, there's that one there. Packing materials. Packing materials. Packing materials. Packing materials. Packing materials, we have a total of 36,000. We have to share it. It is dependent or distributed based on the number of customer orders. When I move to drivers, number of customer orders, we have 6, 20, and 10. So overhead absorption rate will be total overheads divided by total activity level. Our total overhead is 36,000. We divide by total activity level, which is number of customer orders, 6 plus 20, 26, plus 10, 36. I'm going to get shillings 1,000 per order. What will product T have? Number of orders made under product T will be 6. So you take start with the rate because it's common. But whichever way, 1,000 I multiply by 6. Q, I will take 20 or 1,000 by 20. Then product M, I will take 1,000 by 10 to give me 6,000, to give me 20,000, to give me 10,000. Then I add all this. I'm getting 36,000. Where is this 36,000 from? It is this one here, which I am distributing to the departments. That is what we are doing to these 3 departments. Under packing materials, we are now distributing the overheads to the departments of the organization because we want to know the cost of producing each unit in each department. Which department is making us to incur a lot of cost if they produce very low number of products? What can we do? Can we send some people home? Can we rearrange the team so that we see the effect of doing that? That is what they are trying to do here. Now, because of time, I want you to go ahead, go to production scheduling, distribute it, set up cost, distribute it, quality control, distribute it, receiving materials, distribute it, so that when we meet tomorrow, we'll be able to get the total overheads for T, Q, M, we get total overheads, and then be able to calculate the prime cost because we have direct material cost and direct labor cost, and even now proceed to getting gross profit because there's something given there which we'll be able to say how to apply. How will we get the direct labor cost? How will we allocate those? How will we get the product cost and even reach the gross profit if margin is given or not given? So that's enough for today. Have a blessed night and let's meet tomorrow. For newcomers who are not in our paid group, the numbers, I provided them here, 0793 555 000, 0719 525 1,000. Those who are already in class, please do me this favor. Share your username. If you shared it already, just indicate now a mail. To which number? 0794 555 000. If you do this, I will gladly make you connected to our email, and then you learn or be able to go through the theories that I've just demonstrated for you in topic number 5. Topic number 5, complete. It's already complete with notes and even videos that I shared with you there. This one also will be added to that list before the end of tomorrow. Thanks for your time. Have a